Good morning, traders. Paul here with GammaEdge. Today is Thursday, June 8th. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today. We've had a little bit of weakness creep in the short-term market models. We're bearish on a 0 DTE or a 1 to 3 day swing. If you've got some profits, you may want to think about taking some of those off the table. If you're looking to play a directionality right now, we're kind of mixed. The cumulative tick, which is our shortest termed indicator, closed below the previous day. This is a trigger day down, and the railroad track pattern has moved to cash. We're waiting for a break in either direction. All this being said, we are in a longer term uptrend. Basically not a trigger from yesterday, but we did confirm to start adding longer exposure. You'll see this here on the next slide. Transitions, we closed at 42.67. Yesterday we said that to the downside, the 42.60, 70, and 75 all to look to be in play, and we finished right where we thought we would. The overall transition areas of 42.70 and 42.45, we're seeing a little bit of loosiness down below us. You'll see this here in the charts coming up. When we see the transition ranges get really ugly, we expect a little more volatility in the SPX, so we are mindful of that. We do think that sentiment will start moving more protective or more opportunistically to the short deltas as we drop below 42.50. We don't necessarily anticipate that because we do have some support down there, but just be aware that there are some lines in the sand below us that are appearing. Combo transition. Transition, as I said, is loose. It's broken. 4200 downside is the line in the sand. 4265 contains an area that needs to be filled in with calls. We are starting to see some weakness creep in here. Left goalpost 3900, right goalpost 4300. The 4300 line remains incredibly strong. It's been this way all week. Everyone is targeting 4300. It is short dated, both from a gamma and a charm perspective, so just be aware of that. We are still out of the money call dominant above us, and in the money call dominant below us, but we are starting to see some cracks in the ice at below 4300. 42.95 is one of those areas, and 42.65 is another. So the out of the money calls need to really step up here, and we need to see a continuation of the bullishness. The JPM in the month end of quarter short calls at 43.20. There's 39,700 approximately sitting there. They've been neutralized. And what that means is long calls have been stacked on top of them, effectively negating them. From a SPX landscape view, 4,300 continues to grow. It was at 73,000 yesterday. It's at 74,000 at GEX today. We are watching the growth of the 4350, the 4400, and the 4500. The market is clearly indicating those as upside, but with some of the strikes between us and those targets now starting to flip into a negative delta regime, it means we've had some monetization of the calls, and the out of the money calls need to step up here. For the 0 DTE folks, 4280 is 0 DTE P-Trans. If you're in the Discord, you know what that means. 4250 is the downside. So we would anticipate this would be the first range that we would see somewhere in there today as we start the day. 4,300 is the dominant coincident strike to the upside. If we take 4,300, we most likely will stall just above it. There isn't a lot above us, but of course, watch the value command for targeting above. The lower charm strike is 42.45. We've got lines at 42.50 and 42.40 kind of bracketing it. So we got this triple going on down there. If we lose the 42.45, we could get pulled down towards that 42.40, but most likely will stall as the 0 DTE today really doesn't have anything down below there. We are watching the 42.55s, the 42.75-80 range, and the 42.95 as possible overnight parking zones. It just depends on how strong today is. Tomorrow is actually a very strong day in terms of the expiry, and so we could move either way. Again, for the Discord users, watch value SPXP for targeting above and below and play accordingly. Cumulative tick model, we had a few things turn off, as I said, but we had the longer term confirmation now start to move up. Note it's horizontal. You see this ribbon across the middle of the screen. The fact that it's horizontal tells you really, net, there hasn't been a trend. There still isn't a trend. Even though we're above it, it could reverse very easily. This is not predictive. This is a momentum indicator. We are on the long side, no question about it. But the fact that we haven't sustained a long-term uptrend and we've been back and forth, as evidenced by the horizontal nature of the colorful ribbon in the middle of the page, you want to be careful. So don't get out over your ski tips. PM settle complex. This looks at the gamma for just the PMs in isolation. 4300 is very, very clear. You can see that 4320 sitting there. Note the call open interest is at negative 3600 instead of minus 39,000. This means it's being neutralized. So in the PM complex, it still has a little bit of residual, but when we go to the combo complex in a few slides, you'll see that it's been completely stomped into the ground and is now net positive. Same thing here up at 4365, which is the end of July, has been neutralized in the combo complex, has a minor presence here. These become nodes. They become parking areas, and the fact that the deltas flip here as well as the gamma is generally a stopping point, a pause point. As we move up there, they will become at the money, and deltas and gamma will be maximum. Just be aware of that. The fact that 4300 is between us and them, there is a lot to overcome at 4300, and 4300 is also the call open interest dominant strike for the PM structure. That's significant. So as we push up towards 4300, we could magnet towards it. We don't think that's going to happen for reasons I'll get into here in a few slides. But just be aware, 4300 is dominant, it's strong, and it's very much intact. Now, to the downside, your eye can probably see that double structure at 4240 and 4245. So it really opens up the range. That double structure will continue to grow as we go through time here. As long as we remain above it, those out of the money puts will be supportive until they're not. So just be aware of all of that. Looking at the 0 DTE, your eye is drawn to the gamma flip that exists at 4275, 4280, but then you also look down and you see a node at 4255. That node kind of breaks up the pattern to the downside. Could be a pause, a resting place, however you want to describe it. We do not think we're going to push any further south than 42.35 in the 0 DTE. Reason for that is we've got fairly strong deltas all the way below us, although we do flip go back and forth in deltas between where we are right now at 42.67, but all the way on down to this 42.35. We think the 42.35 and everything will continue to be supportive as those positive flows will rear their heads, and we'll have support underneath us. Now, that being said, we would like to say if we do push higher than 4,300 today, we'll probably stall out. The reason for that, absent any targeting above us, is you can see that the call open interest and the gamma above us, and this will be reflected also in the deltas and the charm, really are not there. So today is not, even though it's 231,000 contracts that are coming off today, it's actually not that strong above us, and I would say it's a little stronger below us. Hence, even your eye can see the imbalance with a little more favoritism to the puts, which should be supportive. Taking a look at tomorrow's 1 DTE, very, very strong. 500,000 contracts coming off, 4,300 line, both coincident on both the COI, the call open interest, as well as plus GEX. We've got a lot to overcome there, and you can see that 43.10, 43.20 are clearly in play for tomorrow. So today will be important to see what happens and how people position for tomorrow. Don't ignore that double 42.75, 42.80. That could trap us today and position us to actually close within that 42.85 to 42.95 areas. Those would be nodes that we would anticipate today could play into tomorrow. Also note the 42.50 represents a node, so either part of that the 42.45 to 42.55 range. And then down below that, 42.25 up to 42.40, we have another node that exists in there. So just be aware, it's kind of loose below us. We can move, it's well within range. With the broken structures or the loose structures, we typically see volatility go up just a little bit and some perhaps some knee-jerk adjustments. By our eye, 42.50 is really the important number for today and tomorrow, and you can kind of see that here. This is combining today and tomorrow in here. You can see the delta structures actually have the red starting to creep in. These are the absence of out-of-the-money calls above us, which is important. And then below us, you can actually see the out of the money puts below us are present. And now we're starting to see a little bit of erosion into the week. Haven't seen this. This has not been the normal structure. Now, granted, there's only 2 days here, but 757,000 contracts combined between today and tomorrow is significant. We have a net positive expiry, our call-dominated expiry, and although this is the SPX and it's cash settled, there is, there could be range or reasons for these folks to take these off the table, especially if they don't think we're gonna make progress up towards 4,300. Again, over 4,300, you can see how Gamma just completely collapses off above that. So just be aware of that, and then also note the delta structures to get up there are flipping back and forth. So although we do have some call-dominated Gamma on the way up, we also have some delta structures that are not necessarily supportive to an aggressive move up. Here's that 4240, 4245 line. These will just continue to grow. So this is why we're saying that 4250 zone is going to be really, really important. If we can remain above that, we'll be supportive into the weekend, and we think we're in pretty good shape. But if we lose that 4250, 4245, 4240 zone, that could trap us to the downside. So just be aware of how this could play out for the week. Taking a look into next week, actually seeing a pocket here above us. You can see where the deltas have flipped at 4280 all the way up to 4300. So the 4300 line on the delta side is actually not constructed. We've had a significant amount of calls for next week actually come off the table. So these are out of the money calls, they're near the money calls, and the fact for these to start flipping on the deltas is somewhat worrisome for the bulls. And the out of the money call speculators have really got to step up here and do something. If they don't, I think we're going to have some challenges. Taking a look at the combo complex, you can see that although we are still 1.3 billion in net Gamma, so very much call dominated to the upside, we do have that 4285 and 4295 deltas now starting to show that in the combo complex, which is everything combined together, almost 20 million contracts, we're starting to see some cracks in the ice to the upside. So I would be watchful of this. I would be mindful of this. If this continues to grow, this will increase bearishness and become overhead resistance as we move up. So we are watching this carefully. The 4320s that you see with the red, remember that's the JPM end of month. The deltas are red, but the Gamma is now positive. These have been pounded into flatness and basically have no impact in terms of Gamma from the 39,700 short calls that are sitting there. They're not liquid, so they're going to remain there through the month of June to the end of the month. So we'll see what happens here into next week, but just be aware the combo complex is not necessarily supportive right now of an aggressive move upward. Taking a look at the landscape, this is our final slide. Left goalpost 3,900, right goalpost is 4,300. You can see just the huge magnitude, and it has grown overall. Market is still positioned for 4,400 and 4,500. These lines are continue to grow, so there are calls that are still going in, but take your eye right down here to 4,200 and 4,250. Look at the transition structure. The transition structure is really indecisive. When we see that, there's a lot of parking areas that the market can hide. This is a low exposure Gamma zone, and coincidentally, the Delta zone looks like this too. And so when we see something like that, we want to be very cautious, because if we can't get out of this transition, or if we keep coming back to the low pressure zone, we fail to make advancements to the upside. So that's it for today. If you have any questions or comments, we urge you to go to GammaEdge.us. In the upper right-hand corner of that web page, you'll see a pricing tab. Come on in, fill out the blanks, come on in. 14-day free trial, all the tools turned on, no risk to you. A lot of great educational materials, great group of traders, and we're just having a lot of fun. On Twitter, follow us at GammaEdges with an S, and here on YouTube. Two things. First of all, if you like today's comments, go ahead and hit the thumbs up. It gives me immediate feedback that I'm providing content that you find useful. It will keep me doing this. And two, subscribe so you get notified next time we post videos and can tell you what we're seeing. So with that, I bid you farewell. Have a great Thursday. Don't get out over your ski tips, and hope to see everybody in the Discord. Thanks.